the S&P 500 weekly chart where the buy and sell signal will be gauged, and it doesn't get any more cut and dry than this situation. We're going to switch to another S&P 500 weekly chart, but first in this one, this magnet level from the bottom of October 2022 could become qualified and confirmed end of week, this coming week, on end of day March 1st. On the week of the 4th, there was this close, followed by a down close the next week, and a up close this past week. So all it has to do is open higher than this close for Monday the 26th, tick higher than this high from the week of the 18th, 5111.06, and then close end of week March 1st, end of day Friday, higher than this close from the week of the 18th, and this becomes qualified and confirmed. The wave up projection for D wave up wave 5 was tagged, and that does not happen very often, having this D wave up projection get tagged, and that is an indication of exhaustion somewhat. It's really stretched, so that's just a projection for the upside. And if this gets qualified and confirmed, this magnet level, that's a contrary indication to that for more possible upside movement in price action. And all of the risk levels in the weekly chart could become qualified and confirmed, just like the magnet level. So this aggressive sequential, this combo sell risk, the sequential cluster at 4974.24, and the sequential at 4969.32. All of them could become qualified and confirmed. And some of the drama for closing under this close from the week of the 28th, 4958.61, was taken out on this nice up move for last week on the 18th, and a close below this close, 4958.61, will print the sequential and combo sell setup 18 recycle count, and then all of these 13s will have R's printed there, and that negates them for any more possible downside associated with them. So that would be the indication of the C change that we're headed to. And there are a few economic reports in the way of printing all those recycle R's in the weekly chart. The initial jobless claims, I believe, bad news for unemployed people filing claims, is good news for the markets. So they have it a little higher, and I would say a beat under 201,000 would be bad news for the markets. And the analysts here, Wall Street Journals, where Market Watch gets its predictions for these levels here, the month-over-month personal consumption expenditure is going to tick up a little higher. Same thing with the core on the short term. But then once we get to the year over year, they have it going down here, PCE year over year, core PCE year over year ticking down a little bit into the 2 handle from last report, 2.9. That's when we went into the 2 handle. So I believe the markets could put up with exactly like this is showing for the year over year and the month over month going up a little and year over year going down. If there's any deviation there, especially in the year over year. So I don't think it would be a big deal if it stayed at 2.9, but if it goes back into the 3 handle, there could be a threat from that to visit this close here and get under there, 49.58.61, but that's a long way away from where it closed. I don't believe traders and investors that have missed out are going to let it go down that far, so there's a really good chance that these will all turn to R's, and if they do turn to R's, then I will start seriously looking at buying on any pullback. Let's see what happens if it gets close to this and doesn't go under for end of week next week on Friday. I will be doing some adding and buying close under this close, 49.58.61, and I'm a shorter and a seller for end of week next week on Friday. And as a disclaimer, I have the recycle count set to 18. That's not the mark sanctioned. Theirs is at 22. But I've had good luck with 18 all these years, and 22 weeks is a lot of weeks. So even 18 weeks is a lot. That's what, 4.5, almost 5 months of the close being higher than 4 bars back. So that's quite a feat in itself.